Real estate demand for office space. That's finally improving, especially here in Manhattan. Diana Olick joins us with that story. Hi, Di.
Hey, Morgan. Yes, several new reports point to improvement and a potential bottom in office demand. Manhattan office buildings in June had an average visitation rate of 77% of 2019 levels. That is the highest monthly total since the Real Estate Board of New York began tracking early last year. Visits were up from 72% of those levels 1 year ago. Class A-plus buildings saw a 91% visitation rate, also the highest since tracking began. But some B and C buildings, particularly those with prime access to transit, also registered improved visitation. Now, looking at a national picture, in Q2, the office market posted its first quarter of positive net absorption since 2022, according to CBRE. Net absorption is the total amount of space that has been leased minus the amount of space that has been vacated during a specific period. Now, leasing activity improved year over year, and space offered for sublease declined to 4.2% of total inventory from 4.7% a year before. Manhattan leasing was the third strongest in the nation behind Atlanta and D.C. And finally, the VTS Office Demand Index, which measures the amount of new square footage requested by employers each month, it rose 17% year over year in Q2 and has now seen annual growth for one full year. And experts at VTS say that with a year of growth behind us, we can now say that office demand reached a bottom last year. Guys, how about that?
All right.
Yeah. Sorry.
I was going to say, that's exciting. I mean, I'm looking for NATO, right? Had earnings earlier this week. It's up 3% today. It's up 8% week to date so far. This is one of those office REITs that I think speaks to what you're talking about here. The questions I have, how much of this is the requirement by so many employers for more workers to come back to the office? How much of this is the fact that supply is coming offline as well as you're starting to see more buildings converted to other things?
I think you've answered it on both sides. It's a mix of both. Yes, employers are asking more workers to come back to the office. And in areas where they're not, and they're vacant office buildings, you are seeing them being changed over either to residential complexes or something else. But you are seeing some of that vacancy start to fill up a little bit, whether it's office workers or something else. But there's still obviously some trouble in the loan market in CMBS for commercial real estate, and you're going to continue to see that play out. This is demand, though, and as we're starting to see demand come back, that means at least the market itself is starting to recover.
But not for everything, Diane. I mean, there's buildings in Midtown that have been written down. No, office buildings in Midtown, as you well know, that were valued at hundreds of millions a couple of years ago and are selling for $8 million.
Exactly. And valuations like that, not only in office, but also in apartment, are way down because of higher interest rates. What I'm talking about here is that demand is starting to come back. So when we're at the bottom, we're at the bottom. And then you say, is it getting less bad? And that's where we are now. There's still a lot of trouble out there. No question, David, you're right. But it is starting to come back on the demand side.